Hi, my name is Fallon, and I'm here today with Chegg Tutors to talk to you about the topic of business structures. So, proprietorships versus partnerships versus corporations. A business can be structured in several different forms, the most common being proprietorship, partnership, and corporation. Sole proprietorship has one owner, it's the simplest. The single owner pays personal income tax on any profits and is personally liable for, or personally responsible for any liabilities. The next type is a partnership, which has two or more owners, and these owners share profits or losses depending on how the business does. And partnerships don't incur taxes on their profits before they're distributed to the partners. And personal liability is also a factor. Any partners in the business are personally liable for any issue the business may encounter. The third type of business structure is corporation. Corporations come in three different types: C, S, and LLC. All corporations are legal entities that are distinct from their owners, which limits the owner's personal liability. So the owners of a corporation are not personally liable for any issues the company comes up against. And stock is an element in every type of corporation. It provides a transferable means of ownership, so anyone who purchases stock has a form of ownership in the company depending on what type of stock they purchase. That's if it's a publicly traded company. Corporations also have tax disadvantages sometimes depending on the type of corporation. So again, the three types of corporation are C, S, and LLC. Whenever you register a business as a corporation, the automatic assumption is that that corporation is going to be a C corporation. C corporations are common, but they have a distinct tax disadvantage in that a corporation is taxed on its profits twice. Once through the business, as the business is taxed on its profits, and then the profits are again taxed whenever they are distributed to the stockholders in the form of dividends. Whenever the stockholders receive dividends, they pay personal income tax on those profits. So, C corporation profits are taxed twice. The next type is an S corporation, where profits and losses are reported on personal tax returns. So S corporations don't have that double taxation disadvantage. And then the third type is an LLC, which is very similar to the S corporation. And S corporations and LLCs, or limited liability companies, are the most common for small businesses, and really the only difference between the two of them involves how the business owners are affected by employment taxes. Essentially, employment taxes are the only difference between S and LLC. Their profits and losses are reported in the same way on personal tax returns. So, to recap, proprietorships have one owner, they're the simplest, and that one owner is personally responsible for any liabilities and pays personal income tax on the profits. Partnerships have two or more owners. The owners share profits or losses as well as any liabilities, and profits are only taxed once on each partner's personal income tax return. Corporations are legally distinct entities from their owners, so it limits the owner's personal liability. And stock also affects ownership. There are three types of corporations: C, S, and LLC. S and LLC are both have their profits or losses taxed once on personal tax returns, and C corporations have profits taxed twice. Once when the business reports the income or the profit, and then one's when the stockholders receive the income in the form of dividends. So if you have any other questions, feel free to get in touch with me or another Chegg tutor. Thanks for watching.